Let's bring in Mark Newton now. He is the global head of technical strategy at Fundstrat. It's good to see you again. Got you on because you had a note today suggesting you see some stabilization, but a rally that fails and breaks below 134 in Apple. That's a painful level.
Yeah, increasingly, Apple has started to show more and more signs of technical weakness, Scott. The stock has largely been range-bound for about 16 months, so it hasn't really gone really anywhere for quite a time. But we all know Apple's up, over 160% off the 2020 lows. So it's been a broader outperformer. Now we're seeing signs that might be changing. So the real key level near term is going to be 134. And if Apple gets under that level, then just given its weight in the S&P, it's up, I think, more than 7% of the S&P, up more than 13% in the QQQ. That would be a big negative, I think, for the stock market, and we'd start to see increasingly more and more weakness out of technology than we already have.
Is it likely that it's going to breach that level?
I think it will. It's difficult to say it's going to happen right away. My thinking is it's probably more likely in January, February than right away, but it's definitely a level that investors have to keep an eye on. I mean, Apple has always been the most important stock of the market in the last couple of years, but increasingly, just given this weakness, that's really important to investors to watch and make sure that if that level is breached, then that means that tech is certainly going to begin potentially a period of final capitulation for this sector into first quarter of next year.
Is tech most at risk today to a hawkish Powell?
That's a great question. I think a lot of it depends on what happens with the 10-year. My own thinking is 10-year getting back over 391 is a big warning sign. For S&P, that same level is probably right near, 39.12 or so. 39.06, I think, was the most recent lows in the S&P. Getting under that would be a big warning sign. So uptrends are still intact with the S&P. We've been up 7 weeks in a row, over 10%. No signs yet of the market truly rolling over, even after 4 down days. But if we start to get under 3,900, that's going to be really a big deal for the market. I think that would mean that December is going to turn out a lot less rosier than really what many think.
We'll see what role, if any, the Fed chair himself plays in any of that in about 60 minutes' time. Mark, I appreciate it very much. We'll see you soon. That's Mark Newton from Fundstrat. I think we can kick around, Carrie, on the desk here, an interesting note that some have out today discussing which of the mega cap techs are most at risk, or less so in the most bearish of scenarios. And it's apropos to the conversation that we started this program with Jassy of Amazon. They say Amazon has the most downside, Microsoft the most insulated in a bear case scenario. You want to weigh in on that? You own both of those stocks.
Yes. So I think Amazon has suffered the most with Meta, but what we just talked about, Apple, Microsoft, and Amazon. It's down 45% this year. I mean, the stock's been cut in half. And what we've heard is that they're getting religion about costs and trying to be effective and efficient in the way they grow the company. So our feeling is that there's less downside in Amazon because of what it's gone through and what the management is talking about. If we look at Microsoft has been under a halo, as has Apple. People love it, and Microsoft has maintained a high multiple throughout this last year and a half. When tech has softened, it's come down, but nothing like Meta or Amazon. And, we're underweight Microsoft, we're overweight Amazon right now, we're underweight Apple, which most of the world is because it's such a large weight. But I think that right now you've got the COVID risk and China problems that are affecting Apple more than any of the others because it's a manufacturing company.
This is a Jefferies note, by the way, which I wanted to mention, too. They're the ones who put that out, the most downside and the most insulated.